So now I'm going to get ready to go over the QQQ chart and show you how to look at this. So first we're going to mark the highs and the lows of the previous candle. So this will be year low. We'll put the weekly high and low on this candle because on Tuesday it'll be a new weekly candle. So this is technically the previous candle. Let's see, 4-day. We got an inside bar here. This candle closes on, I believe, Tuesday or Wednesday. So if we look at the calendar, 1, 2, 3. So it closes on Wednesday. The 2D chart. This candle closes on Tuesday, so it could be a possible 3-1-2 bullish. Let's see what happens on Tuesday. This could go up higher or it could stay inside. We don't know yet. On the 1-day, so we have a couple of gaps here, so we'll mark the gaps. So we have a gap here. We have a gap here. Now we'll get onto the 1-hour chart. Same gap from the daily. Same gap from the daily. We have a small gap here. And then we have a gap here that also includes this gap. So what we'll do is duplicate this. And we'll say gap 1 hour. So now we'll look at our supply and demand zones. can see price. Let's go to the rectangle. So price came down, it stopped here. Then price went up to here and it stopped. So we'll mark this as well. Then price came back down to same demand zone, took off, it blew through the supply zone. It hit 314, so we'll mark this supply zone. You can see price came down to this level at 306, and then it went back up. Actually, we'll mark this is a demand zone. You can see price went back up. It didn't quite hit the supply zone. It rejected, came back down to the demand zone, tried to go back up, didn't create a new high. And so as soon as we broke this 1 hour bar, we were ready to go into our downtrend. And that was a nice move to take. So we have our levels for yearly, quarterly, monthly, weekly. We have our gaps for the daily and 1 hour chart. We have our 1 hour demand and supply zones. We can see that price is, kind of hanging out around this level. We have an inside bar for the 1 hour chart. So when the market opens up on Tuesday, we'll be looking to see what happens between these two levels. So what we'll do is we'll mark this bottom of this candle and we'll say, you can see we have a nice distance, 274 to 269. That's about, it's a $5 move there. So we'll put an entry. So this will be a 312 down. So we'll put 312 bear, 1 hour entry. The market is pink, and we'll set an alert for create alert. So we want to know when price is about so we'll say 312 bear 1 hour at 274.62. We want to know about the crossover. So if price goes below this, we want to know. If price goes above this, we want to know. So we'll create a regular alert down here for the reverse crossover. Click create. So now we can see our alert showed up. Same thing here. If we go above this, this will be a 312 bull on the 1 hour, which is also an entry. We run out of space. What can I get rid of? I'll get rid of the R. Boom. So click OK. And we'll set an alert here as well. We'll say 275.96. 312 bull 1 hour at 276.06. So now we have our entry for bullish move, entry for bearish move. We'll go down to the weekly chart and get our price targets. So we can see that we haven't had a move below here in a while. So we're going back to 2020. So we have a price target here at 260 for the bearish movement. So we'll say WKPT. We'll make it pink and click OK. Then we'll duplicate and say that's our next price target. For bullish movement, we have our weekly high, and then this is the next weekly price target. So we'll say WKPT, and then we'll make it green. And then this is the next price target at 314.56. Okay, so that's the weekly price targets, and then we go down to our daily time frame. We'll see that our this candle here is also our daily price target. So we'll say / DPT. Then our next price target is at this gap daily. So we'll just edit this and say DPT. So we have our weekly low, and then we have our weekly price target. So it looks like here, this is a daily price target. Then we have another price target at 264.30. So it really helps to color coordinate everything. So when we go into our hourly chart, we can see, what's going on. So we have an entry, we have a weekly point, then we have our, let's see, so we have a lot of price information between $260 and $299. It's about $39 to $40. So this is a pretty good idea. So once we go 312 bull on a 1 hour, we'll be right in that gap, and we can possibly fill that gap up to 282. That's a nice price movement. That's a good $6 there. So between 276 and 282, let's see what Tuesday's expiration is for 278. And I don't know if we have a 279, but let's see. 278 for Tuesday. So 278. So QQQ. All right, so it's showing us QQQ now. So we said 278. As of right now, it's at $1. I'm sorry, not the 17th, the 21st. So 278 is at 152. That's a little out of my price range, so I'm going to look at the 280. Something else to also consider is this is your ask price. So you'll buy the ask and sell the bid. So 95 and 99. This is a $4 bid ask spread. And we can also see that the open interest is 4,087, and then the volume is 17,000. So right now price is at 274.69. We can see at 275 this has the highest volume. The next highest volume is 280. So I mean, we'll just go with this one because the volume looks good, the open interest looks good as well. Volume means the volume that has been in this position, and an open interest means that these are positions that are currently open right now. So we'll right click on this, click on copy, and then we'll do Command V for Apple or Control V for PC. Click enter. We can see that right now, well, let's get rid of all of that stuff. All right, so we see a high point here at 918, and then we see that if we go above this level, that's our entry at 141. So we have about a good, what's that, about 700%. So we can just click our Fibonacci retracement tool. 1.4 times 2 is 2.8. So we'll go to 2.8 and then bring it back down to 1.4. So we'll have 100% at 2.8. And if we're able to get up to at least 8.38, that'll be 500% move. So if we're able to get to $9, be 9 minus 1.41 divided by 1.41, 538% move to the upside. So 538%. If we are able to, let's say we buy 3 contracts, so it'll be 1.41 times 3, so we'll spend $423. If we're able to make $9, we'll say 9 minus 1.41. Profit is $7.59, so we'll multiply that times 100 because every contract you buy gives you 100 shares. $7.59 is the profit for 1 contract, but say we buy 3 contracts, price is $22.77. So you're looking at a $423 investment to yield $2,277. So that's a pretty cool move if things should go in that direction, given that this is also a high point. So let's put a price level here. So what we're saying is that, you know, if we're able to go 2-2 bullish, we want to fill this gap here. And then we're looking to fill the gap first at 648. That could be a take profit zone. We're looking for this next level, 8.12 for our next take profit point. And then looking at 9.18 for our next take profit. And if price happens to go above here, I will leave a runner and we could just go from there. So this is pretty much how you look at a contract after analyzing the chart. So that's saying if we go from 276.06, that's a pretty nice move. Pretty nice move there. So this is what the Qs looks like, right? So now we'll go into XL. I'll show you XLE energy because energy's been doing really, really great. Let's do a new drawing set. So we'll go back up to the yearly and mark all of our levels. So look at this. Last year, 2021, it was an inside bar for the yearly. As soon as we broke outside that inside bar at 59.41, we've gone up to a high of 92. So energy's been doing really, really well since about November, December last year. So if we zoom out, we can see right above this yearly high, 59.41. This was the beginning. This was January, February, and then huge move, right? Let's go to the monthly chart. So when the year started in January, we went inside bar, 2 down, 2 up. This is the 1, 2, 2 reversal. The 1, 2, 2 bullets reversal. So if I add my chart bubbles back, one, two, two bull. See, 1, 2, 2 bull. So this was your entry for the year at 57.69, and it hit $90 so far. That's pretty impressive. So if we were looking at this chart last week, I think, what was it, the 10th? Let's see, the 10th. All right, so the 10th was Friday. So we looked at our chart for last week on Friday, and we said 2 up to doji candle, and then look at the wick on here. We knew that the bears was showing up. They were ready to come into the party, right? So as soon as we broke below 87.65, or what is this? 87.68. See, 87.68. As soon as we went below that, we would have been ready to get into puts. And then we had several price targets. You had this target here, 86. You had a target here at 82. You had a target here at 79.86. You had a target here at 75. And then you had a target here at 71. So you were able to see a nice, you could have just played XLE puts, regardless of playing like Oxy or Exxon or any of the other companies, Devon Energy, etc. $86 down to 72. Pretty nice move for energy, right? So let's clear those out. So now we go to the 4-day chart to see what's happening. So actually, what is this? 6-7. So we look at 6-7. So you had 1, 2, 3, 4. That candle closed on the 10th. So as soon as we closed on Friday, that was a nice move to the downside. This candle actually closes on the 22nd. So we look at that again. Start on the 17th, so that's 1, 2, 3, 4. It'll close on the 22nd. Right? So yeah, you could have got an entry on a 4-day chart or on a weekly chart. Now let's go to the 2-day chart. We had a 2 up, and then a 2 down that happened. This 2 down candle started on the 9th. So we could have took an entry to the downside on the 9th at 89.28. So we could have been in this trade possibly Thursday instead of waiting until Friday. Then you go down to the daily chart. You can see we could have took our position at 91.71. 2 up, 2 down. So 2 bear to the downside, right? That could have been your entry at 91.71 with a stop at 93.31. So that would have been a good trade for last week or this week here that just closed today on Friday. So now we'll look at the gaps. We see as a gap here. So we'll highlight this. And then we'll duplicate. So we have one gap there. We have a slight gap here, but I'm sure it'll be much more significant on the hourly chart. So let's go down to the hourly chart. So we have the gap here, but we can see on the hourly chart, that gap actually started right here at 88. So we'll mark this gap 1H. We'll make it blue. So we have this gap here, and then from here at 87.68 to 86.11, this is your daily gap. And then we'll edit this and say 1H. Okay. All right, so now where's the next gap? A gap here. So let's just duplicate this and we'll bring it down to here and duplicate again. So our next gap is from 82.25 to 80.63. Now we'll look at some supply and demand zones. So let's I want to take the chart bubbles off because now it's too many for me. So take that off. Now let's look at the chart. So this is a good amount of price action here. So we'll just start here and mark our demand zone. See 2-2 bull. Price went up. Price stopped. So wait. Price got to a high. It hit a support. Lower high here. So this is our demand zone. We'll make it green. And then price got up to here, and then it paused. Then it went up to here at 93, and then it paused. So I'm actually going to mark this supply zone here. And then I'll mark this supply zone here. So price went up, it paused here, came down a bit, and then it ran up to the supply zone. It paused and played in this zone for a bit. So this is actually a gap, so we don't need to put a demand zone here. We get through supply, hit the next supply, reject it. This was our trade right here, $92 down to 72.6. So that was a pretty nice week if you had puts on XLE. Now we'll look at our price targets and possible entries. So based on this 1 hour chart, we have an inside bar, a 2 down. If we happen to go 2 up, so 1, 2, and then 2 up for this next candle, our entry will be right at the monthly low. So price would be at 74.38, so it's not that far off. So I'll just edit this current price level and say 122 bull, 1 hour entry. If price breaks below this level here, this could be an entry to the downside. So this would be a 2-2 bear continuation. The 1 hour, and we'll say entry. We say continuation because it's not a 2 up, 2 up, 2 down. It's just an inside bar, a 2 down. And so if we break the low of this, it would be a 2 down continuation. So 2-2 bear continuation, right? That'll be our entry. I'll mark that pink, hit OK. And so now let's look at our price targets. So let's go back to the weekly chart. So on the downside, our next price target will be here. That's our next lowest point. So week PT, we'll make it pink. Then we'll duplicate and we'll add another one in. This is our next. And then we have one more. We'll do this one. So we have 3 weekly price targets from $71 to $65. On the upside, I mean, this is a really, really big candle. So we could possibly be inside next week. If not, going 2 down next week. So we'll have to see how things shake out with this. My thesis is that we'll probably be inside next week. And then the following week, we could probably be bullish. So we'll see how that goes. Now we go down to our daily chart. So basically what I'm saying is that it's no need to put a weekly price target, because if we drop this much in 1 week, I don't imagine that we'll retrace all of this activity in 1 week, because it took us, let's see, 1, 2, 3, 4, 5, 6, 7 weeks to get to this point. And then we went through all of these price targets in 1 week. So that was a big move to the downside, right? So that's what that is. Let's go down to the daily. So our daily price targets could be, we have one target, that's the weekly. We have another target that's pretty close at 70, so that's only 50 cents difference. We'll leave that the same. We'll leave that the same. We'll leave that the same. So I think the weekly price targets are pretty solid. $3 movement. Yeah, it's pretty good. So we don't have to add in any daily price targets to the downside. To the upside, if we happen to go bullish next week, this is a possible price target for bullish activity. And then our next price target will be at this gap 1H level. So we have two price targets, 77 and 80, and then we'll also get this one. So we'll just duplicate. All right, so now when we go back down to the hourly chart, the 1 hour chart, we've been in this zone between 74 and 72 for a couple of days, or I'm sorry, a couple of hours. So we could prepare for a big move to the upside or downside. We'll see what happens on Tuesday. And you can see that as we look at this chart, we have a good amount of activity of price action from $65.36 up until $90. So we have a good idea of what the gaps are, what the price targets are, what the entry is for the 1 hour chart. If we look at the daily chart, Tuesday could be an inside bar just because of how strong this movement was to the downside, or we can continue to the downside and break this low and continue to go down. Wednesday might be a really good day to see what's going on with the XLE ETF, because we could be inside on Tuesday possibly. If not, we might have a big move to the downside or a big move to the upside. But Wednesday will give us more insight as to what could happen with this chart going forward. We got our weekly low here. We have our weekly high up here. So this was all in 1 week. It's a lot of activity. Yeah, so that's XLE. Now let's look at tech. Tech has been doing pretty bad since the year started. So we'll start a new drawing set. And we'll go to the year. This is good practice to go into your charts and just look at, like what's happening. And just have a good understanding. Here we go. A good understanding of what's happening on all time frames. That way when you see, price action happening, you have an idea of where price can go, because price is usually indicative of what happened in the prior, based on the prior time frame or prior candles. So we'll mark our levels. This quarterly high is pretty close to the yearly high, so we'll just edit this one. Let's go on to monthly. So here we have a 2 down, 2 down for next week. It's a pretty long wick, so we could try to retest this. So we would have a 2-2 bull reversal on the weekly time frame. Let's go down to the daily. We have a 2 up, 2 down, 2 up. So no actionable signal on the daily chart. Got a couple of gaps though, so we'll highlight these. So this is a daily gap. All right, now let's look at the 1 hour chart. So if we zoom out a bit, we have this 1 hour gap that's the same as the daily gap. We have this 1 hour gap that's the same as the daily gap. Then we come here and we see we have a different gap. So let's mark that. So gap 1H. Then we'll duplicate. So now we have all of our gaps identified. Have an inside bar on the hourly, so we can say, below 124.52. This will be a 312 bear. And then above it, we have 125.41. And this will be our 312 bull. On the 1 hour. So now we have that identified. Let's look at our supply and demand zones. So go to the rectangle tool. You can see price fell from 149 down to 129. So here is a demand zone because price stopped here before it went back up. So we'll mark here. So this will be our demand zone. Price went up and stopped. It paused here for a second before it went back down to the demand zone. So I'll mark this as a supply zone. Price got to a high. So this is a resistance level or supply zone. So boom. All right, so price came down to the demand zone. It paused here for a bit. Came back down to the demand zone. It blew through this brief supply zone. And then it went up to the supply zone. It came back down and the supply zone became a demand zone. And then it went to the next supply zone. Price rejected immediately. It came back to this supply zone / demand zone. It had a lower high, which meant that we were getting ready to go into a bearish trend or downtrend. So we could have took our trade on the 1 hour at 141. On the 7th at 3:30 p.m., which is Wednesday the 7th at 3:30. Is that Wednesday? Yeah. Is that Tuesday? Anyway, that was Tuesday. Okay, so Wednesday we opened up. It was downtrend. We fell through the supply zone, created the gap, fell through the demand zone, tried to retrace. We had a 2 up that became bearish. Could have got back into the trade here at the low of that 2 up candle, and then boom, more downside. So we have a good understanding of price action, you know, between 122.47 and I guess this is, what's the high of this? 143.43. So that was the highest point. I'll remove that. So that's a good $20 of movement for XOK. Now let's go back to the weekly time frame. So now we'll just identify our weekly price targets. And then we have one more. So that's a pretty good move. That's $12 move to the downside. I think that's pretty sufficient. If we zoom in, we'll see that this week high is one price target. Then our next price target will be up here. So we're looking at 130 to 142. That's a $12 move. So I think that's pretty sufficient. Let's go down to the daily chart to see if we have any other price targets. So looking at this here, our weekly high is also a price target for the daily. Then our gap is a price target for the daily time frame. And this will be our next daily price target. Okay, looking at the downside for the daily. So we have a price target here at 121.23. Then we have, let's duplicate. So we have another price target here, and then duplicate one more time, another price target there. So we have a good amount of insight between these levels here. So if we zoom in on, let's look at the 1 hour chart now. So looking at the 1 hour chart, when we zoom in a bit, we can see that we have a good understanding of price action between, actually it's a little lower than that. So we're looking at between 110 and 142. That's $32 of price action. We have a good idea of our entry for the 1 hour is here. We have a weekly entry, which will be a 2-2 bull. We don't have any daily entries. Let's look at the daily chart. So basically our daily entry will be above 125.8 and 122.47. So that's the daily entry. And then weekly, the weekly high 2-2 bull, if we go above this level, or if we continue to the downside, our entry will be a 122.47. And we also have our price targets listed, so we can understand what our price targets are to the downside and what our price targets are and gaps to fill on the upside. So this is XLK and XLE. Something else I haven't quite gone over, but I just want to show you this pretty quickly. It's marking your broadening formations. So ideally you want to do this from the right to the left side of the screen. And so this here could be a broadening formation, and then this low point to this low point. And basically what that means is, that looks crazy. So looking at the weekly chart, price bounces here and it comes down here. And so we could broaden the formation, or we could start to go back up and hit this monthly high 149. So we'll see what happens. Broadening formations are pretty good to get an idea of when you want to get into your trade. So you want to typically get in. So once we hit this level, bounced up, had an outside bar to the downside, could have got in right here on a weekly chart at 139.69, and then took the trade down, came back up a bit, and then big move to the downside, right? Looking at this on the daily chart, so you can see price is basically going in a wave between these lines. So up, down, broadening formation gets bigger because we take out the low of this candle. So we go down. This is the high point of the broadening formation. As we go back into the uptrend, we take out this high and we go and touch the top of this. As we go into a downtrend, we break here, take the trade to the downside, we take out the lowest point here, and we expand the formation. So in a nutshell, broadening formations, but of course I'll go into that in more detail next week when we meet. So in this video, we went over QQQ, we went over XLE, and we went over XLK, and briefly touched on broadening formations. So yeah, this is pretty informative. It's a lot of information on the chart, but definitely will help you understand where price action could go based on the levels that we set up here.